I started to trade Forex successfully at the beginning of 2006. After 2 or 3 years of losing and making all the silly mistakes that everybody does, I finally got into the groove. And at the time it was not so difficult because price was clearly trending. And for example, this is the British pound on a weekly chart, and you can see that from Christmas 2005 right through till November 2007, price was clearly in an uptrend. And you will have heard the phrase, let the trend be your friend. And it's very true. If everybody is buying, then why would you want to be selling? However, the end of 2007 and the beginning of 2008, price then started to go sideways for many months. Suddenly, I had to learn to be more flexible because the plan of just buying when everybody else did was difficult because one day it was up, next day it was down. Then, having learned to be more flexible, we suddenly reverted to a trend and it became very easy for the next 6 months as price dropped like a stone. Then we had periods of indecision again, so we go back into range trading, and then we had some trends and a mixture. And the markets currently, and certainly in the last year or so, have been a lot more mixed. Therefore, I have shown you in the first week how to trade trends, and this British pound on a 4 hour was a classic example. I showed you how we were looking for longs on the bottom trend line, and the more aggressive amongst you could look for counter trend shorts at the top trend line. However, at the same period of time, the CAD was going absolutely nowhere. It was going sideways. Therefore, if I was only trading with the trend, I would have had no trades. As it is, I have had 8 out of 10 winning trades on this pair in the last month, simply by trading the bounces that I've shown you off major support and resistance areas, so longing at 9900, shorting at 1000, all the way along. Brilliant. Unfortunately, my recent long has just lost, but at the end of the day, I have had 8 winning trades, an 80% success rate, because of the fact I was willing to accept a different strategy for a different market pattern. If you were trading daily charts, this flexibility, for example on the pound, has given you opportunities with both strategies. We are actually in a clear uptrend going back to January on this pair. However, if you were simply trend trading and taking trades off this daily trend line, between January and the middle of the March, you would have had 0 trades. Equally, you would have then waited another month for a trade this week on Monday at 158.10. In the last 3 weeks, we have had multiple opportunities to take trades because we were trading bounces off this major support area at 158.00 and shorting at 160. No strategy works all the time. Therefore, you either need to have bags of patience and be willing to sit things out, and sometimes you can be sitting out for months and months, which is neither profitable nor good for your frustration levels, or you need to learn to adapt. On the subject of flexibility, you also need to be flexible on the time frames that you trade. Now, I concentrate on the daily charts for my analysis. I like to see what I consider to be the overall picture of what is going on, but I trade mainly from 4 hour charts. This is the pound on a daily chart, and I showed you from the 15th of March to the 10th of April, were we only trading the trend, I would not have had a trade. So in other words, for a 3 or 4 week period of time, I wouldn't have had a potential trade. However, on a 4 hour chart, this is that daily trend line, and you can see price never got near it. However, because we've now created a trend line on a 4 hour chart, we had in the self-same period of time 2, 3, 4, 5, 6 or 7 possible trades. I know this can be a little confusing, but the principle of it is this. Concentrate on daily charts for your overall analysis of where you believe price is going to go and where price is going to react, but then consider looking at, say, a 4 hour chart for potential entries and for more trades. When two strategies come together and both give you a signal at the same time, then the rewards can be exceptional. As you can see here, I longed at 58.10 as per the analysis, and the reason being it was an intersection of this major support and resistance and the daily trend line. Now, if you were in this trade, let's say if you were only in at $10 a pip, you are currently 1,500 pips in profit from a trade planned from a daily strategy, but with a mixture of both. But everything really comes back to support and resistance in terms of trend lines and horizontal support, as I showed you the other day. My main strategy involves breakouts from an area followed by a pullback and then with a move beyond, and I will show you that in the next video.